Hello and welcome to our Brexit market update. We've been contacted by loads of clients over the last 24 hours, all asking for our opinion on what's going to be happening in the marketplace over the next 6 months. So far there are really two things which I want to talk about. I want to talk about house prices and I want to talk about interest rates, both of which we think are going to be really important factors in decision making over the next 6 months. Now, I was once told that the Chinese word for crisis is made up of two symbols. One is fear and the other one is opportunity. And as you can probably hear from the York office today, there's lots of activity, so I want to really focus on opportunity today. So let's talk about house prices first of all. Now, there's been lots of projections made in the run-up to the vote about what might happen to house prices in the event of a vote leave. Now, clearly there was a lot of rhetoric on both sides, and we have to think about how house prices are arrived at. Now, fundamentally, it's a balance between supply and demand. Now, none of the builders magically overnight have created another million homes, so the supply side remains entirely constant from where we were at last week. And of course, that supply side is that there aren't enough homes for the people who live in this country. And therefore, we see that the market will remain very solid, supported and underpinned by supply. And actually, a lot of the house builders we suspect are going to be under pressure as a result of the leave vote, certainly judging by the share prices in the first 24 hours. And again, what that means is that they may not be building as many new homes as they were planning on, once again meaning that supply should hold up really well. So we come on to our second point, which links really to prices and to interest rates, which is about how cheap money is at the moment. Now, we know that the Bank of England are going to be really keen to try and get a sense of calm into the marketplace. So one of the things which they're going to make sure of is that money remains flowing and money remains cheap. Now, an average 5-year fixed rate mortgage is about 2.5%. Now, this is incredibly cheap money. So if I was a buyer at the moment, the most important thing is about how much is it going to cost me when I buy the home that I want to purchase, given that supply is so tight. So you can fix your rate for 5 years at 2.5%, which again is incredibly cheap. So regardless of what happens to the market over the next month, 2 months, 6 months, buying a home is a long-term decision, whether you're a landlord or whether or not you're a first-time buyer or a home mover. So we think that actually the opportunity exists in the market now because we can be sure of what interest rates are. Now, will that position change over the next 6 months? I'm sure that it will. And that's why taking advantage of the interest rates as we find them today, we think is going to be really important. And that's why, certainly over the next 2 to 3 months, we see absolutely no reason that the market is going to cool off from the very steady levels which it's been at over the last 2 to 3 months. So I'm going to have a lot more information on this in the next 2 to 3 weeks. So I'll probably do an interim market update in about 2 weeks' time. So please keep watching, and thanks very much for watching today.